Okay, so everyone is talking about the AI boom, right? It feels like this massive modern-day gold rush where fortunes are just being minted overnight. But what if I told you that the most obvious path, building the next shiny AI app, is actually the most dangerous one? Let's dive in and figure out a smarter way to play this whole AI revolution.
And here's the stark reality that gets totally lost in all the hype. You've got venture capitalists pouring billions into AI applications. But the truth is, the vast majority of them are just burning through cash at an incredible rate. They are on a very, very short runway to oblivion. It's an unbelievably high-stakes gamble.
So if chasing the gold, the AI apps, is so incredibly risky, where should we even be looking? This is the central question, right? It turns out the most durable, cash-flowing opportunities, they aren't in the software at all. They're in the gritty, real-world infrastructure that makes the whole thing possible in the first place.
To really wrap our heads around this whole dynamic, we need a simple but really powerful analogy. And honestly, the perfect one is to look at this AI boom as a new kind of gold rush.
Think about it. During the original gold rushes back in the 1800s, sure, a few prospectors got super lucky and struck it rich, but the people who made the consistent, reliable fortunes, they were the ones selling picks, shovels, and supplies to all the miners. And that exact same dynamic is playing out right now in AI. So, to find these modern-day picks and shovels, we need a map of the entire AI economy. So let's break down exactly what that map looks like.
We can actually break down the entire AI industry into 6 distinct layers, or what we'll call tiers. And understanding this stack, this is the key to seeing where the real sustainable value is actually being created. So let's start at the absolute foundation.
Before you have a single line of code, before a single chip is even made, you need power. And I'm not talking about a little bit of power. I mean a massive, staggering amount of it. AI might live up in the cloud, but it feeds on raw, brute force electricity.
Get this, by 2030, data centers are projected to consume more energy than entire countries, like India. So the real question is, who powers the power? The opportunity isn't just about buying utility stocks. It's in the specialized businesses that build and service all this energy infrastructure, like the electrical contractors who specialize in 24/7 data center services.
Okay, let's move up one layer. We've got the power, now we need the brains. This is the hardware layer. This is that global arms race for chips, led by giants like NVIDIA. This is where all the magic computations actually happen.
But again, the smartest play isn't just buying NVIDIA stock. You got to ask yourself, who's building those $10 billion fabrication plants? Who's maintaining the ultra-clean rooms inside? Who are the specialized service companies getting paid $150 an hour just to change out clogged HEPA filters? Companies like Primera started out just cleaning these places, and now they're the go-to experts. That's the real opportunity.
And where does all this hardware and all that energy come together? Well, that's Tier 2, the data centers themselves. These are the physical homes for AI. Just last year alone, a stunning $455 billion was invested into building these facilities by companies like Microsoft, Meta, and Amazon.
And this quote just hits the nail on the head. These massive AI empires literally cannot function without local businesses doing the plumbing, the roofing, the wiring, and all the specialized cleaning. It is the unsexy, essential work that makes the entire AI boom possible. So forget chasing unicorns, this is where fortunes are quietly being built.
So this brings us to a really clear fork in the road. There are 2 fundamentally different ways to play this game. Let's put them side by side so you can really see the difference.
Now what's so interesting here is the contrast. On one side, you've got the picks and shovels play. That's energy, hardware services, data center support. These are real-world businesses with high cash flow. On the other side, you've got the gold miners, the AI app startups. They're burning through $500,000 a month. They are incredibly risky, and even if they somehow succeed, they face this huge problem called key person risk.
And that's the real kicker for the app builders. If you actually manage to build something successful, your single biggest threat becomes a company like Meta or Google just poaching your senior engineers with a $2 million package. Your entire business, your competitive advantage, it can literally walk right out the door. That is a tough, tough game to win.
Okay, so we've mapped out the terrain. We've identified the safer, more durable opportunities. But how do you actually execute on this strategy? Let's walk through a simple 5-step playbook.
All right, first, use AI as a tool to make whatever business you're in right now more profitable.
Second, think about buying the boring businesses that service the boom. Third, if you are going to build software, don't be some idea guy, be a workflow fixer. Solve a real painful problem. Fourth, and this is critical, stop waiting. The advantage goes to the people who start owning and implementing this stuff now. And finally, master AI agents. Make AI think with you, not just for you.
Now we have to address the elephant in the room. With all this hype, all this money pouring in, are we just in a massive bubble that's about to pop?
The numbers certainly have that bubble feel to them. Remember that figure we mentioned? $455 billion invested into data centers in a single year? That's an almost incomprehensible amount of capital, and it's all betting on the future of AI.
And look at this. A huge chunk of the entire stock market's growth this year, I'm talking about 40% of the S&P 500's gains, has come from just 10 AI-heavy stocks. That level of concentration, well, it's a classic warning sign of a market bubble.
You know, the Financial Times put it perfectly. The stakes are incredibly high. For the U.S. economy and its markets, AI had better deliver on its promise.
But, and this is a huge but, here's what makes this time different. Unlike the dot-com bust, AI is already deeply embedded in our economy. An incredible 90% of recent GDP growth is reportedly related to AI. It's already creating real value. So the smartest strategy isn't to try and time the market, it's to own the essential, non-negotiable infrastructure that stays valuable whether we're in a boom, a bust, or anything in between.
So that's really the choice, isn't it? The gold rush is here. It's undeniably reshaping our world. The question you have to ask yourself is, are you going to join the thousands of prospectors gambling on finding a gold nugget? Or are you going to build a lasting business by selling them all the picks and shovels they'll ever need?